Welcome to CEO Money. I'm Michael Yorba. Thanks for joining me. I have DJ Van Keuren, Vice President, Hayman Family Office, on the show with me today. DJ, welcome to the show.
Thank you for having me.
My pleasure. All right, now working for a single family office, the family that created Giorgio Perfume family offices for real estate. Tell us about that. What's going on in the inner workings with that?
So the family that I work for is a Beverly Hills family. They had the father, the patriarch, initially created Giorgio Perfume, which was the largest perfume in the world. He sold that out in 1986 for $165 million. That's public knowledge. And then one of his sons was working actually in Europe, found out, realized he wasn't going to take over the family business. So about a year or so later, he was doing some consulting, invested about $40,000 into this teeth whitening product with a couple other people. And he grew that business to $200 million in revenue in 100 countries, sold that out to Philips in 2011, and then started investing into real estate. And initially started buying some multifamily, all internal capital. And then about 9 months ago, I came aboard probably about a year and a half from another family. They had recruited me. And I started looking at the portfolio and realized that we had the ability to really work on something that was unique in the real estate space and that didn't exist. And that has to do with what's going to be the first boutique office brand in the U.S. Under the name of Vibe. So currently, we're developing the brand identity, the strategy. We have 9 locations that we're what we call vibing out. So like Vibe Broadway, Vibe Hobby in Texas, Vibe Arts District in Denver, so that we can build up a portfolio of these boutique offices.
Brilliant. It's going to catch on. One of the other things you wanted to talk about today was family offices and real estate. Let's go into that.
Correct. So the average portfolio for or allocation to real estate for a family on a global basis is about 18%. In the U.S., it's about 10.1%. And so it's a significant part of a family's portfolio. And in fact, it's about the third area, and in many cases, the second area of true wealth creation for families. So, that might start off from buying some buildings that they own for the business that they're running, to actually starting to buy the actual assets themselves. And so it plays a significant part in a family's portfolio. And there's definitely levels of understanding of the various property types and opportunities in the market. But as a whole, real estate definitely is a favorite for families.
What are you doing to promote education about real estate within the family offices group or silo, if you will?
Well, that's a good question. So about 4 years ago actually, I was working for a family out of Boulder, Colorado. And we were working on some initiatives. That's where the wealth was created for this gentleman. And what I came to realize, talking to other families, was that although they might be an expert in one area where they had a great area of wealth creation, let's say it's chemicals, they have this big exit, they're now sitting on $400 million, and they're sitting with all this money, but they don't understand. They know chemicals, but they don't understand private equity or real estate or hedge funds. And so with my passion, understanding, and knowledge in real estate, I decided to start providing some resources that families could actually go to in a manner that they're not going to be solicited and they could truly learn. So I created what's the Family Office Real Estate Institute, which is a website that provides teasers, it provides white papers, videos, podcasts. We've interviewed probably about 21 different family offices or family office professionals simply on real estate and family offices. I did write a book that is the field guide to real estate for family offices. And then most recently, about 6 months ago, which was a natural progression, had started the Family Office Real Estate magazine. And there's really 3 criteria that I put in there. One, first and foremost, is that the content all needs to be toward real estate and families, and that a lot of times you'll read a magazine, you might highlight one article, right? Because you're like, oh, this is good information. So we want every single article to be like that, to where they're going to really learn something and say, wow, this is great. The people that write the articles, we don't look for any selling. It's all true information based. And, we're providing that for a way for families to have additional information. In fact, a big topic in real estate is the opportunity zones. So we wrote about the opportunity zones and gave a little bit more insight into that, whatnot, as well as some 1031 exchanges. We talked about some compensation if they're looking to hire internally, and then we went into the market cycles, which is really the number one area for families. Where are we in the cycle, right? Is it a good time to invest? Is it not a good time to invest? Should I still be buying multifamily? Should I not be buying multifamily? So we went into that area. And then lastly, I'm on the Forbes Real Estate Council, so I also write articles for Forbes that talks about different aspects for families as well.
Brilliant. Brilliant. Web address for the Family Office Real Estate Magazine?
It's familyofficerem.com. So that's Family Office Real Estate Magazine, familyofficerem.com. And then the institute is usfamilyofficerealestate.com.
Right. DJ, thanks for being a guest on the show. I really appreciate that. I hope to have you back on the show and we can start delving in to some of the articles, some of the education that you're putting out for these people. And, from time to time, you're going to have people that you bump into as your guest to be on our show. I really appreciate it.
By all means, we'd definitely love to do that. Thanks so much for having me.
You're welcome. You've been watching CEO Money with Michael Yorba. Don't forget, like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.